Have you been watching silver lately? It's been making some serious moves, creeping dangerously close to that big psychological level. $100 an ounce. Now, when an asset starts flirting with a number like that, it's not just noise, it's a signal. It forces even the most skeptical investors to stop and pay attention, because it usually means something much bigger is happening just below the surface. For a growing number of people, buying silver right now isn't just a speculative bet, it's a strategic move. Why? Because it offers a rare trifecta: protection, growth potential, and real-world utility. Think about it. Unlike so many other assets that are purely digital or paper-based, silver is tangible. You can hold it. But more importantly, it's used. It's a critical component in our modern world, and that industrial demand creates a solid foundation for its long-term value. This isn't just a random price spike. Silver's recent surge didn't just appear out of thin air. It's been fueled by a perfect storm of factors. First, let's talk about industrial demand. It has absolutely exploded. We're seeing unprecedented consumption from key growth sectors. The solar energy industry, for instance, is consuming massive amounts of silver for photovoltaic cells. The electronics sector, from your smartphone to your laptop, relies on silver for its superior conductivity. And the electric vehicle revolution. Silver is essential for batteries, wiring, and countless other components. As the world transitions to greener technologies, the demand for silver is only set to accelerate. While this demand has been surging, the supply side has struggled to keep up. Mining output has been relatively flat, and new discoveries are becoming rarer and more expensive to develop. This growing gap between soaring demand and stagnant supply is creating a fundamental tightness in the market. It's a classic economic squeeze, and it's putting a powerful upward pressure on prices. But industrial demand is only half of the story. The other half is investment demand. Over the past few years, we've seen a perfect storm of economic uncertainty. Persistent inflation has been eating away at the purchasing power of our cash. Geopolitical tensions around the globe have created a sense of instability, making investors nervous. And there's a growing distrust in traditional fiat currencies and government-controlled financial systems. In times like these, where do people turn? They turn to hard assets. They seek refuge in things that have held value for thousands of years. Gold is the obvious choice, but silver is often called the people's money for a reason. It's more accessible, more volatile, and has that dual demand story that gold lacks. When you see both industrial users and investors rushing to buy silver at the same time, that's when things get really interesting. Historically, this combination is the recipe for an explosive move. And that's exactly what we might be seeing unfold right now. Silver isn't just a shiny metal, it's a critical industrial commodity and a safe haven asset, all rolled into one. This unique duality is what gives it such compelling potential. So what does the future hold for silver? Where is it headed from here? The path forward will likely be shaped by three key forces. The first is monetary policy. Keep a close eye on what central banks, especially the US Federal Reserve, are doing with interest rates. If they begin to ease policy and lower rates, it typically weakens the dollar and makes hard assets like silver more attractive. Lower rates reduce the opportunity cost of holding non-yielding assets, driving more investment capital into the precious metal space. The second major factor is inflation. If inflation proves to be stickier and more persistent than policymakers expect, the demand for silver as an inflation hedge will only grow stronger. People will continue to seek out assets that can protect their wealth from being devalued. As long as the cost of living keeps rising, silver will remain a go-to choice for preserving purchasing power. Finally, we have to consider the continuation of industrial expansion, particularly in green energy. The global push toward decarbonization isn't just a trend. It's a multi-trillion-dollar structural shift in our economy. Solar panels, electric vehicles, and 5G technology all require significant amounts of silver. This isn't a cyclical demand that will fade away. It's a long-term, structural demand that is baked into our future. If this green energy transition continues to accelerate as planned, The long-term supply pressures on silver could support elevated prices for years, if not decades to come. Of course, it's crucial to remember that silver has always been a volatile asset. Its price history is filled with dramatic peaks and troughs. It's known for its sharp, aggressive moves, both up and down. This isn't an asset for the faint of heart. But if you look at its history, one pattern becomes crystal clear. When silver starts to build momentum and move toward major psychological levels, it rarely stops quietly. These periods of consolidation are often followed by powerful trend-defining breakouts. We're not just talking about a small percentage gain, we're talking about moves that can reshape portfolios. The journey toward $100 is more than just a number. It represents a convergence of powerful economic, technological, and monetary forces. It's a story of surging industrial need colliding with timeless safe haven appeal. Whether you see it as a hedge against uncertainty, a play on the green energy revolution, or simply a bet on an undervalued asset, the case for silver is becoming harder to ignore. The signals are flashing and the market is paying attention. The question is, are you? Let's dig a bit deeper into why that $100 mark is so significant. In financial markets, big round numbers act like magnets for price. They create a psychological barrier, but also a target. When an asset breaks through a level like this, it can trigger a cascade of buying activity. Algorithmic trading systems are often programmed to buy on such breakouts. Mainstream media starts covering the story, drawing in a new wave of retail investors who were previously on the sidelines. It creates a feedback loop, a sense of FOMO, fear of missing out, that can propel prices even higher, often much faster than the underlying fundamentals might suggest. Think back to other assets that have crossed major thresholds. When Bitcoin first crossed $10,000, it seemed unbelievable. Then it went on a run that captured global attention. When a stock breaks through a key resistance level, it often signals the start of a new, powerful uptrend. Silver is no different. A decisive break above $100 would not only be a historic event, but could also usher in a new era of price discovery for the metal. What many people fail to realize is just how small the physical silver market is compared to other major asset classes, like stocks, bonds, or even gold. The total value of all the investment-grade silver in the world is surprisingly small. This means that even a relatively small shift in global investment capital moving into silver can have an outsized impact on its price. If just a tiny fraction of the money currently sitting in bond funds or equity markets decides to allocate to silver for diversification or as an inflation hedge, the effect on the price could be dramatic. This is why seasoned investors refer to silver as a coiled spring. It can spend years trading in a relatively tight range, building up energy, and then suddenly release that energy in a powerful explosive move. The combination of its tight supply, growing demand, and small market size makes it uniquely sensitive to shifts in investor sentiment. And right now, sentiment is shifting. Let's also consider the gold to silver ratio. This is a simple metric that tracks how many ounces of silver it takes to buy 1 ounce of gold. Historically, this ratio has fluctuated, but it often reverts to a long-term average. In recent years, the ratio has been very high, meaning silver has been historically cheap compared to gold. Many analysts believe this ratio is due for a correction. If the ratio starts to fall back toward its historical average, it means one of two things must happen. Either gold's price falls or silver's price rises significantly faster than gold's. Given the current economic environment, a major drop in the price of gold seems unlikely. Therefore, a reversion in the gold to silver ratio strongly implies that silver has a lot of catching up to do. A move toward the historical average could mean a doubling or even tripling of silver's price relative to gold purely from a historical valuation perspective. This isn't just a guess, it's a trade based on decades of market history. So as we watch silver inch closer to that monumental $100 level, remember what it represents. It's not just an arbitrary number, it's the culmination of a global energy transition, a crisis of confidence in traditional finance, and a classic supply and demand squeeze in a market that is far smaller than most people realize. The journey will undoubtedly be volatile, with plenty of ups and downs along the way, but the underlying forces driving this move are powerful and long-term in nature. This isn't just a short-term trade, it's a long-term theme playing out on a global stage. The story of silver is becoming one of the most compelling narratives in the financial world today. Thank you so much for watching. If you found this analysis helpful, make sure to hit that like button and subscribe for more deep dives into the markets. We'll see you in the next video.